How about we dig in a little deeper? We've got a guest here. Always enjoy talking to Craig Bolanos. You know, Craig is, as we bring in here, co-founder and wealth advisor, VestGen Wealth Partners. We'll have a website address for Craig coming up. But, wow, Craig, volatile week, especially when we look at what's been happening with those equities.
Well, yeah, I mean, volatility is going to come because it's an understatement if anyone declares relations between nations are harmonious. They're far from that. I mean, the intervention in Venezuela, the rising tensions with the Iranians, all the hubbub about Greenland, I mean, that hasn't exactly eased anybody's fears over international conflict. And this inflation story continues to underpin the U.S. economy. You know, I'm penning an article right now talking about how energy and materials are the two largest sectors so far this year in terms of performance. That's the same way we started 2022, Tony, when things got nasty in the bond side of the market, courtesy of inflation. I don't think all of that's going to unravel 2026, but it certainly makes for newsworthy headlines, doesn't it?
Yeah, absolutely. And again, you look at the metals there. Obviously, we've seen silver really take off over 200% higher year over year. Right behind it, though, platinum at 160. I had gold somewhere around 75, and even copper at the 34. And we started the show with the volatility over in nat gas as well. Before we go on, though, you mentioned kind of that inflation, if you will, and some of the things that we've seen in the past. And I hope I'm not throwing too big of a curveball here, but we talk about inflation. Is it easy to look back in the rearview mirror and say, this is what led to that? Was it something that Federal Reserve reacted to? Was it just nature, if you will? I mean, can we look back and say, oh, we need to learn from this next time?
Well, you know, I think something we can all learn from next time is I understand why we did stimulus to, you know, support this country in particular. You know, when COVID first broke, you had bipartisan support and we got the CARES Act done. But then in March of 2021, many people might remember we did this follow-on rescue plan. It was called the ARP, the American Rescue Plan. That happened in March of 2021, and I think the further we get into history is not going to be kind, because the American Rescue Plan probably wasn't needed. Was it wanted? Of course it was, but the U.S. economy was already on its way back, and that massive introduction of a second wave of stimulus unfortunately just created too much velocity, too much money supply, and I think when the history books get written, people are going to recognize that you can't give the patient too many antibiotics, and the ARP is going to stand out as one of those.
So is there a path to getting, I mean, it didn't happen overnight, so I'm sure we can't fix it overnight, but are there...
The dollars are printed, Tony. The dollars don't go away. Go ahead.
Well, I guess we could sit here and burn them, but for some reason, they still keep showing up.
Hey, you know what, Tony? You burn yours, or better yet, you know, bring them to my house. I got a burn pit. Wink, wink. No, I don't.
But you know, we know we're in this situation, and it's going to take really a concerted effort by everybody. Is that an accurate statement?
It's going to take a lot of time. It's going to take a lot of time. But, you know, we have to think of what's happening right now. You know, how is this market doing so well? Think about OBA, the One Big Beautiful Bill Act, all of those benefits in OBA, the carve-out for tip income, the carve-out for overtime income, the expanded child tax credit. I can go on and on. The benefits of that are all going to be showing up right now in the next 60 days. You put on top of that the deregulation that we've had. You put on top of it, there's all forms of stimulus, Tony. There's not just monetary stimulus. There's fiscal stimulus. And in this country, it's just not ending. You want to know how you're going to put the genie back in the bottle? You're not. It's just going to take time. And a big part of the inflation story for all the American citizens that are listening is one of currency now, because you talked about gold, you talked about the metals. It's really all forms of commodity. De-dollarization is a very real thing. I don't think it's cyclical. Cyclical is short term. I think we've moved into a secular world where the dollar will remain the world's reserve currency, but we're not going to command the strength that we once did. So I jokingly tell people, hey, better go to Europe while it's on sale still.
Wow. Okay, you mentioned gold back in there. 4,900, first time on record. And then obviously we've been watching what's happening here in silver. How high can gold go here?
I mean, gold could go higher. I'll say gold could be in that 5,400 an ounce range this year. That wouldn't be too unbelievable. And let's remember why it's happening. You don't have other countries selling U.S. assets. You don't have other countries selling the U.S. dollar. You just have other countries buying less greenbacks, buying less dollars each month. And if they're buying less dollars each month, that money's got to go somewhere as a storage of value. And where's it going to go? It's going to go into the euro, it's going to go into the British pound, or some of it finds its way into gold, some into silver, and I do think we'll continue to see slivers into cryptocurrency like Bitcoin, despite the recent price gyration from 124 down to below 90,000.
Okay, we mentioned earlier the equities a little lower here in the overnight session. You know, we had a big rally though after an announcement by President Trump that we wouldn't see tariffs. Of course, that came hours after the announcement that we wouldn't have troops rolling into Greenland. Where do we go here with the Dow, NASDAQ, S&P? What are you watching?
Well, how about we just go higher? I mean, I'm watching the fact that, again, the S&P 500 equal weight, where each stock in the index is worth 1/500th of the index, versus the cap weighted, where the 10 largest tech stocks control the entire index. And what I see is a story where the rotation into other sectors is healthy. This market is broadening. That doesn't take away the risk that is here, but I think this market, if you're asking, I think this market continues to grind higher. I think you have earnings per share in the United States that could be 12 to 14%, but this might be the first year in 4 years that stock prices can't advance as quickly as earnings, simply because the price of those earnings, you and I call it a PE, Tony, we come into the year at relatively high PEs, but I don't see any reason that multi-asset class portfolios aren't going to have a 4-peat.
I'm going to lead you right into here. It's like putting the ball up on the tee and letting you knock it over the fence. But can we take what we've been talking about and can we retire and stay retired?
You can absolutely get retired and stay retired, but I just think there's no room for complacency, Tony. So the first thing I want everybody to do is look at their risk budget, whether it's your 401k, your child's college fund for education, whatever it might be, and look at what your risk budget is. What's in stock, what's in bond, what's in commodities, what's in alternative investments, and rebalance. And then the second thing I want people to do is no one should ever sell America, but people should pay attention to geography and get some money onto the other side of the pond if you don't have the international flavor because of that currency and de-dollarization I mentioned. And then number 3, just make sure that you're properly rebalancing with good security selection. I think dividends are going to be more important than ever. And if you do all those things, and you're disciplined and systematic, and you remain enthusiastic over America, you too will get retired and stay retired.
Love it. By the way, website, getretired.stay-retired.com. He's the co-founder and wealth advisor at VestGen Wealth Partners. Craig Bolanos All right, it's 8:42 here Eastern Time. We're rolling through Commodity Wrap Kickoff. We've got your calls, your questions coming up after this.